session I am going to explain about methods of marketing securities. Different way the different capital has been floated into the market. Different methods adopted by the issuer to collect the capital from the market is going to be explored on this session. So in this session, the methods of marketing securities, 6 major methods given in this. First one, pure prospectus method. You know, the prospectus is an invitation to collect the capital from the market. So the prospectus contains the information and it is considered as an official invitation for inviting the capital from the market. The offer for sale method, institution oriented method. Institutional investors are going to participate, they are going to make investment on such securities. The private placement method, where the companies which are privately held, privately limited companies, unlisted companies are going to invest on the issuer under the part of private placement method. The IPO method, initial public offer method, at the very first time the company is going to issue their capital in the market. At launch they are going to offer the capital is going to be subscribed by the retail investors or under the method. In case if the company has already issued the capital, again the company is in need of capital for its further development, further expansion or diversification of their business activities. For that they are in need of fund. It comes under the further public offering. And the right issue method, normally under the right issue method, which gives the rights to the existing shareholders to subscribe the new portion of capital, is floated by the organization. So it is span of control, dilution of control can be limited with the existing shareholders itself. So for that purpose the companies are also going for right issue method. Even the company may not need not to find out the new investor for the issue, where the existing investor itself is ready for investing on the company. That comes under the right issue method. The bonus issue method it's like the excess profit of the company, or the company can have a kind of the premium, abnormal premium collected from the market, can be converted into the shares which will be issued to the existing shareholders, which will be given to the existing shareholders. In lieu of cash dividend, the company may also give the shares as a dividend. The bonus issue method is being adopted in the market. So let's take the first one. Pure prospectus method. Under the pure prospectus method, this is going to be the cooperative enterprises which mop up the capital funds from the general public by means of issuance of prospectus called pure prospectus method. It's most popular method for making public issue of securities by the corporate enterprises. So normally you know that it is an official invitation. It means the prospectus is the way in which they are collecting the capital. If the company is using or depending only on the prospectus for collection of capital, that comes under the pure prospectus method. It is most popular in the public offer or issuance of capital to the public. For that they are adopting the method pure prospectus method. There are features are associated with the pure prospectus method. First one is exclusive subscription. Exclusive subscription of general public, a minimum of 49% of total issue at the time of the issue is going to be offered to the public. A minimum of 49% is being given to them for making subscription into the securities. Second important features associated with the pure prospectus method is the issue price. It's a stated price in which the investors are going to invest issue either at the par rate or at the discount rate or at the premium rate, prevailing market condition, prevailing norms given by the Securities Exchange Board of India. The company can decide the price in which they are going to collect the capital from the market. Underwriting is a safeguard of the interest of the issuer in the event of unsatisfactory response from the investor. That may happen due to the kind of financial position of the company. There is no proper response from the public, or else the kind of the future plan of the company may not be satisfactory with the prospective investors. So at that point of time, the merchant banker is going to helping out on this process. The underwriter will helping out on this process to subscribe the unsubscribed portion of capital to the company. So you know that if the company is going to issue the capital in the market, at least as per the mandate of Securities Exchange Board of India, they need to collect at least 90% of issued capital. By failure of this, the company needs to return back the capital what have been collected from the market. So for that, the particular purpose, the underwriting arrangement is being done. The underwriter is going to subscribe the unsubscribed portion of capital in your organization. It is not only that the unsubscribed portion, there may be the agreement between the issuer and underwriting firm. No need that one underwriting firm is going to associated with the issue. There may be a consortium of underwriter. Group of underwriter is going to underwrite the issue. There may be a lead underwriter and sub-underwriters or joint underwriters are associated with the issue. In the event, in the failure of the portion of capital is not subscribed by the public, they are going to subscribe the unsubscribed portion of capital. Either they are going to subscribe fully or partial subscription, or they will give the guaranteed subscription for the issue. And the prospectus is an official invitation that invite the capital from the public, from the institutions. For that, the prospectus can be used. There are advantages are associated with the pure prospectus method. The first one, marketing of securities, serves as an excellent mode of disclosure of all such information pertaining to the issue. Because the investor can be able to understand what exactly the company is doing, the history about the company, the milestones, achievements of the company, the products and services offered by the company. And they can be able to know that what purpose the company is raising additional source of fund. The reason is being mentioned. What is the future prospects or the growth of the company? Why the company is requiring the funds? Say for example, the company is requiring a funds for the repayment of debt. The no one investor is ready to invest on that company. So the future or the kind of a growth plan of the company is going to helping out to mop up the capital from the market. That also the important thing that to understand this. As well as in the prospectus, the investor can able to know that the price in which the securities are available in the market and the proportion of the investment to be collected from the various the kind of investors in the market or the floating of securities in the market. The portion of funds to be raised from the public, the portion of funds to be raised in the form of institution from the institutions, either in the form of preferential allotment or a private placement, or what rights they are reserving for existing shareholders or their employees or even for their customers. For example, in Life Insurance Corporation, they have issued the IPO where they have stated the percentage of capital to be subscribed by their employees and their customers. So like the kind of information are found in the prospectus. So normally if the prospectus is adopting the book building method, it stated the price in which the issue is going to happen, mentioning in the price band. Price band is consisting of floor price and the ceiling price in which the securities are being available in the market for bidding. So entire information pertaining to that, merchant banker for the issue, lead manager for the issue, the collection centers where I can collect the applications, fill the application and hand overing the application, all such information are available in the prospectus. So it is going to be the information booklet to the investor for getting more information about such issue happens in the market. Second one, facilitates the satisfactory compliances with the legal requirements of transparency. What are the things that they have been completed? Either they got the due diligence certificate from the Securities Exchange Board of India for further process. Everything to be a transparent in terms of authorized capital, in terms of subscribed capital, that everything can be able to know that what amount of the transparency with the process of issuing the securities in the market. We know that what method to be adopted, how much the capital is going to be collected from the retail investor, how much the capital is going to be collected from the institutional investor. Can we able to understand from that? We call it as a transparency is more in the prospectus method, whereas they promotes the confidence of investor through the transparency and non-discriminatory basis of allotment. So the allotment is also being given what basis the allotment is going to be happen. It's not like non-discriminatory allotment basis is not going to be happen. So the transparency is prevailing in terms of allotment of securities in the market. And the benefits to the issuer, it is going to be the benefit. Most of the popular method amongst the largest issuers are following the method of prospectus for collecting the capital from the market. It concentrates on the economic and the social power being concentrated on more by the issuer by issuing of or collection of capital through this method. Even the socially weaker section can able to participate, can able to be as the investor of the company, because the retail issue anyone can invest with a nominal amount being mentioned on that can be possible under that method. There are few drawbacks are associated with this prospectus method. The first one is high issue cost. What is high issue cost? The cost of capital is high when the company is going for a prospectus method. There are various costs which incurring for mobilization of capital. For example, underwriting expenses. You know that the underwriting is a process where unsubscribed portion of capital is subscribed by the underwriter. But what may happen, we need to give the charges or reimburse the charges to the underwriter and give the commitment charges, give them the holding charges to the underwriter. In case the underwriter is holding for a longer period of time, they are going to sell the securities in the market. For that, the time period, the charges will be reimbursed by the issuer. Unlike the brokerage charges, administrative charges, publicity cost, giving advertisement and other expenses, statutory expenses, legal costs are associated with that. For raising of funds from the market, appointment of lead bankers, other intermediaries who are associated with the issue, appointment of brokers or trading members for the issue, listing fees to the stock exchanges. There are such costs, the huge amount of cost is being spent for mobilizing the capital from the market. And the time consuming process, more time is being consumed and it requires the compliances with the various formalities before an issue that could take place in the market. So that in an average, if the issuer has decided to issue the capital in the market, they are preparing a draft copy of prospectus, appointment of lead book runner for the issue, finalizing the offer price, and find out the financial stability of the company, auditor report, compliance with the norms and the regulation formulated by the Securities Exchange Board of India. After fulfilling all the information, get the due diligence certificate, appointment of lead banker, There are number of such activities has to play during, it is like starting up of the issue, what we call it as pre-issue activities, and the post-issue activities after the allotment of securities, sending refund orders to them, notifying all the investors through the daily national dailies, or giving them proper advertisement or to reach the information to each and every investors. The cost is huge, as well as the time the issue is also high in the pure prospectus method. The second one is going to be the offer for sale method. Institutional placement, where marketing of securities that take place through intermediaries, selling of securities through the intermediaries. The intermediaries like issue houses, like underwriting firm or like a merchant bankers or like a stockbrokers and other people who are associated with that, they are going to involve the process of offer for sale method. It means initially they are going to buy the securities from the organization or from the issuer. Later they are going to sell the securities to the investors. So initially it is not going to be the financial burden to the issuer. The financial burden is going to be transferred to the institutions like issue houses, like stockbrokers, and like the merchant bankers, the kind of people who are associated with this, going to helping out the issuer from this particular problem. It is a case, we call it as offer for sale method. There are few benefits are associated with that, like the sale of securities that take place in two different stages. The first one is going to be the issuer company that makes a sale of securities to the intermediaries, like for example of issue houses, share brokers at an agreed price between the issuer and intermediary. Later the intermediary are going to resell the securities in the market with the market price. With the abnormal price, they are aiming to sell it in the market under the offer for sale method. And the difference between the purchasing price and the issue price constitutes the profit to the intermediaries. For that, the time period they will wait and sell the securities in the market, and the intermediaries are the responsible for meeting the various expenses like underwriting commission, prospectus cost, advertisement expenses. Whatever the expenses that are associated with that is going to be reimbursed by the issuer, and this saves the companies from the hassles of that involves for selling of securities directly to the public, because sometime the issuer may not be known company to the public. At that point of time, the underwriter may be familiar in the market. The underwriter is going to promote the issue on behalf of the issuer. For that, the particular kind of the issues are being rectified through the offer for sale method. Next one, private placement method. The private placement method, where the required capital to your company is being contributed by the privately held firms, privately held companies, individuals who are contributing the required capital to your organization. That the method is called private placement. And one more important thing in this private placement, there is no such requirement of issuance of prospectus. An official invitation is not required. So that also the added advantage of this particular method. The marketing of securities, whereby the issuer makes the offer for sale to the individuals and institutions privately without the issue of prospectus. The major importance of this particular method. There are advantages of this method. There are less expenses are associated with this method. Expenses like in type of the cost associated with the issue borne by the issue houses. Not like the issuer is going to burn all the expenses. Instead of that, here the issue houses are going to burn the expenses that are associated with the issues. and other related expenses, other intermediary expenses are going to be less when compared to the previous method. Second important advantage of this particular method, there are less troublesome for the issuer as there is not much of stock exchange requirements like listing of securities, getting due diligence certificate. There are number of such requirement has to be fulfilled by the firm, the enterprises who are going to mobilize the capital from the market by means of issuing the prospectus. Here the prospectus is not required, so there is number of liberalization in terms of collection of capital in the market by using this particular method. That is what here it is mentioned, that there is no much stock exchange requirement that is concerning about the content of the prospectus as well as the availability, the publicity cost, that are very less compared to the previous methods. The placement of securities suits the requirement of small companies, small enterprises who are going to mobilize the capital from the market. But in the case you can take the large cap companies who are going to mobilize the capital in the market, such case the method is not that much level suitable, because that you are going to find out the companies are relatively small, they are going to contribute the capital required for your organization. So here the private placement is purely suitable for the securities which are being issued by the small level companies. And the method is also resorted when the stock market is dull and the public response for such issue is doubtful. The case we are not able to get the proper response from the public, or the case in which the market is dull. It is like the very low flotation of market, very low flotation of capital in the market. The movement happens in the market. So at that particular point of time, this method of private placement is very suitable for the companies to mobilize the capital. There are few advantages are also associated with this method. The first one, the concentration of securities are in few hands. It means the required capital is being contributed by the very few people. So they have taken over the control, the entire control of the organization. So there is a dilution in the decision making process of the organization. The second important thing, there is creating an artificial scarcity of the securities, thus jacking up the prices temporarily, which is going to misleading the public. So normally this is going to be happen if the stock prices are artificially goes up in the market, that the few people are going to get benefit out of that, the general public is going to lose their money in the market. That going to be happen for this particular method because the stocks are in very few hands in the market. The third important drawback of this particular method, depriving the common investors and an opportunity to subscribe the issue, thus affecting the confidence level of the investors in the market. So normally if the issues are floated in the market, normally the retail investor wants to invest into that. But here the private placements are reducing such participation of general public into the investment of the company. So that going to reduce the investors' level of confidence in the market. Next one is initial public offering method, the IPO method. When the company at the very first time they are going to issue the capital in the market, at large the capital is going to open for public subscription. Second one, even not like for the very first time the companies are going to issue the capital in the market, even after the company has issued the public offer, the initial public offer, they further they need a capital after a certain period of time for their further expansion or a diversification. The companies are in need of funds. They can also approach the market for further mobilization of capital in the form of further public offer. So that the method have been adopted. The marketing of securities which are issued to the successful applicant on the basis of an order placed by them. Number of quotes or the number of shares that they have been ordered from the company. They have been subscribed from the company through their broker. Based on that, the process is going to be completed. We call it as initial public offering method. There are about the concept here is a red herring prospectus. The prospectus is an official invitation that invites the capital from the public. that is going to be issued under this initial public offer method. So the red herring prospectus contains the information like a description about the issuer's business, when they have started, what are the products and services offered by the institution, the milestone, everything is being given on this. The second important thing, the name and address of the key company officers with their salary and last 5 years business history on each. Milestones are being given here. The major or the key stakeholders of the company, CEOs, CFOs, board of directors who are associated with the company and their profile and the salary what they drawn from the company, everything is going to be given on this. The amount of ownership of the key officers, the holdings of them, the promoters holding or other holdings, the type of holding owned by the different key stakeholders of the company is to be given, and the company's capitalization description on how proceed from the offering will be used. So what else the capital that owned by the company existingly, and about the book value, and what is the additional capital requirement to the company, for what purpose the additional requirement is being used, the future requirement, what else the kind of the achievement that they are going to provide in further is going to be discussed on this particular part, and any legal proceedings that the company is involved in, any pending cases, those information has to be provided in the red herring prospectus. So it is about the important method we can use. The majority of the companies are going for issuing the capital at large to the public. They adopt this method when the market is good condition where the people are interested to make investment, and the level of confidence among the investors, the retail investors, is high. At that particular point of time, this particular method will be more suitable. Next one method that we are using, the right issue method. The right issue method, which gives the rights to the existing shareholders to subscribe the new portion of capital. So the company has already mobilized the capital from the market. Again, the company is going to issue the capital in the market for their further process, further mobilization of capital for expansion or diversification activities. So instead of going to offer such new capital going to be subscribed by the new investors in the market, there is an opportunity is given to the existing shareholders to subscribe the new portion of capital. That method is called it as right issue method. So in this method, shall be only for the listed companies who are already listed in the market, they can use this method. Second important thing, the announcement regarding the right issue once made shall not be withdrawn, and where withdrawn, no security shall be eligible for listing up to the period of 12 months. So before that, the company should think whether they are going for right issue method or not. If they have been adopted this particular method, they have to complete the process within the stipulated time period. If they failed to complete, or they have not issued, once they got the permission, after that they have not issued the capital under this method, they have been not listed, the company is not being listed, those securities or those issues cannot be listed in the market up to the period of 12 months. And underwriting and right issue is optional, and appointment of registrar is compulsory. This is a valid point that need to understand the concept of underwriting. Normally the underwriter who is going to subscribe the unsubscribed portion of capital, in the event of failure, the company is going to face the unsubscribed capital is not being furtherly mobilized from the market. That time the underwriter is going to helping out the company to subscribe the new portion of capital. So you know the recent requirement, if the company has issued the capital, on that capital at least 90% should be collected from the market. If it is less than of 90%, they need to return back the capital what they have been collected from the market. So at that particular point of time, it is going to be helpful. Underwriting is going to be helpful. But the right issue method is being decided well in advance. Existing shareholders only going to subscribe the new portion of capital. So it is considered that the 100% it is going to be a successful. So there is no further requirement of underwriter. So underwriting is not mandatory under this. Even the company prefers to have an underwriter, they can have the underwriter, no issues on that. But the appointment of registrar is mandatory for transfer of securities to the names of existing shareholders. On what basis they are going to subscribe? Say for example, the 500 crores of capital is already issued in the market. Again, the company is going to mobilize the 100 crores of capital. The 100 crores of capital, they are not going to give the opportunity to the new shareholders. In spite of that, they are going to give an option to the existing shareholders to subscribe the new portion of capital. So already the 500 crores of capital issued, additional 100 crores of capital is going to issue. It means that the ratio is about whoever asking for 5 shares or whoever already owned 5 shares can additionally subscribe for one more share in the company. So that can be possible, that the rights can be given to the existing shareholders. So with that, the limit, the rights are given. It is up to the shareholders, existing shareholders, to subscribe the portion of capital. Appointment of category 1 merchant banker hold a valid certificate which has been issued by SEBI is mandatory. They can be as lead book runner for the issue to handle out the required operations for the right issue. The rights of shares shall be issued in respect of fully paid shares. Already fully paid shares, only the rights are eligible. It's like only the subscribed for one particular event or one subscribed for one particular call is not eligible under this method. Letter of offer shall contain the disclosure as per the requirement of SEBI, Securities Exchange Board of India. So this has to be communicated with the existing shareholders and get their concern towards that. And the agreement shall be entered within the depository for materialization of securities to be issued. So that the depositories, the role is going to convert the physical form of certificates into the digital form of certificate, call it as a dematerialization of certificates. So that here it is going to issue the shares. It is not in the physical form, it is going to be the digital form of certificates. So it is going to be issued to the existing shareholders. So the kind of agreement between the issuing company and the depository is going to be carried out in order to dematerialization of certificate, and the certificate is going to be issued in the name of existing shareholders on the value of shares that they have subscribed on, allotted by the company. And the issue shall be kept open for a minimum period of 30 days and the maximum period of 60 days. The issue should be open. And a minimum subscription of 90% for the issue that should be received by the company. That is also common for this issue. Until if they have not received, the underwriter can subscribe. No reservation is allowed for the right issue regard the kind of the fully convertible debentures or partial convertible debentures not being allowed under the right issue, because the existing shareholders, existing equity shareholders can able to get the rights under this issue. No compliance certificate to be fulfilled by the lead merchant banker. Lead merchant banker is a category 1 merchant banker. With accordance the regulation, prevailing regulations of Securities Exchange Board of India, with the 21 days from the issue of lead merchant banker, they can fulfill the requirements at least from the 21 days from the date of issue of an offer document. The obligatory for the company, for company where increase in subscribed capital is necessary after 2 years of its formation or after 1 year for the first issue of shares, whichever happens earlier, they needs to comply this regulation. Bonus issue method. Under the bonus issue method, instead of giving cash dividend, this is one of the method adopted by the company to give bonus issue method. Normally the company may have 2 options for mobilizing the capital from the market. Either it may be the external source can be mobilized or internal source can be used. The bonus issue method is one such internal source method. Already the company have enough capital enough funds are available within the organization which can be used for further process. It means like, when you are going to calculate the net worth of the company, it's about the real worth of the company, it is going to be estimated. It is estimated on the basis of paid up value plus reserves and surplus of the company. So the paid up value that remains constant over the period of time until otherwise the company is going to rising up their capital in the market. The reserves and surplus is going to be added based on the retention policy of the company, profitability of the company over the period of time. Once it is going to adding up to the reserves and surplus, there is a portion of profit is being added. So for a period of 5 years or 10 years, the company might have some more reserves. The fund is available within the organization. Instead of going to mobilize the funds from external market, they can have an option to mobilize the internal capital itself. So that going to be used, and for the existing shareholders, the additional shares are issued in the market. The method is called it as bonus issue method, where the accumulated reserves and surplus of the profit of a company is converted into a paid up capital. It takes the form of issue, call it as bonus shares. It merely implies the capitalization of existing reserves and surplus of the company. The issue of bonus shares is subject to certain rules and regulations. The issue of such shares does not any way affect the resources base of an enterprise. Just it is going to be the blowing back of its profit for the future purpose. It saves the companies enormously. The hassle-free capital is being get from the market without paying an additional cost. The cost of acquisition is too low for this particular method. And there are the basic difference between the right issue and the bonus issue method. The first one, the right issue, it is differ from bonus issue on the basis of payment. The issue to be paid for by the existing shareholders, they need to pay for such issue. But for the bonus issue, it's given free of cost to the existing shareholders. It is considered as a in lieu of cash dividend, it is given. The second one, the differentiation in terms of privilege, confer that the privilege on the existing shareholders are given. It is not a privilege issue, it is only the bonus issue. Next one, the paid up shares. Share may be partly paid up also can be possible, but it is the bonus shares, the shares necessarily fully paid up capital only can eligible for that. And the minimum subscription is required for the right issue, but the minimum subscription is not required for the bonus issue, since the bonus issue is a free of cost. It is in lieu of cash dividend, it is going to be given as a stock as a dividend for them. And the separate account, the money is to be kept in a separate bank account by the issuer, but it is not required for the bonus issue because the existing reserves and surplus can be converted as a capital. The rights to renounce. The rights may be renounced by the member in favor of the nominee can be possible. It is going to be the nominee can be subscribed the capital, existing capital, but no such facility is not available. Existing shareholders can get the benefit out of that. And the regulation, there are the regulatory requirements, the provisions of Companies Act as well as Securities Exchange Board of India guidelines which are applicable for the right issue, whereas the bonus issue, it is regulated by the provisions of Companies Article and the Securities Exchange Board of India guidelines. Both are applicable for that. Book building method. A method of marketing securities. A company whereby the quantum of price of such securities to be issued will be decided on the basis of bids received from the prospective shareholders by the lead merchant banker is known as book building method. So it is decided about the floor price and ceiling price for such issue. Based on that, the price band will be decided by the lead merchant banker for such issue. Since the lower price in which the investors wants to invest based on the book value of such securities in the market and the higher value based on the future potential of the company, the floor price and the ceiling price is decided by the lead merchant banker. Before deciding such floor price and the ceiling price, that being floated in the market to know about the opinion, the price in which it is being asked for in the market. That the method is called as book building method. A minimum subscription or the minimum size in which the book building method can be adopted the particular issue, it should be a minimum of 100 crores. There are basic contents or the basic process which involves in the book building method or the first one, appointment of book runners. The book runners should be a category 1 merchant banker. They can be act as a book runner for the issue. They can float the securities. Before floating the securities, they can provide some basic information about such issues to the prospective investors in the market. So that is a role the book runner has been appointed. The second one, preparation of draft copy of prospectus. It is not a full version. The draft copy is only fixed where the issue price is not mentioned. The draft copy of prospectus is serving only the purpose to provide the basic information about the company, the business in which the company is involved, the history of the company, the promoters of the company, the key officials of the company, how the salary they are drawing, what their future opinion or the future prospects of the company, the quantum of funds required for the company for the future purpose, the feasibility, everything is being provided in the draft copy of prospectus. Without the information like the issue price and the minimum lot order is going to be provided, not provided on this case, we call it as draft copy of prospectus, and circulating the draft copy of prospectus to the prospective issuer, it means prospective companies or prospective investors which it is going to be floated, and circulating it is maintaining offer records, what the offer is being given by the different investors in the market. It is like institutional investors, what the price in which they are ready to buy or make investment on such securities. They will collect the offers from those companies or those investors in the market. And intimation about the aggregate orders, how many number of orders received for such issue will be floated in the market. And like the bid analysis, they will finalize the price in which the lower price and the higher price for such issue. The price band is decided during the bid analysis, and the mandatory underwriting, the underwriting process, the underwriter is being appointed in the case of a failure of collecting the capital from the market. They will mandatory to appoint the merchant banker, especially the underwriting of an issue, and like the filing with Securities Exchange Board of India and register of the certificate have been obtained from them, and the bank accounts should be maintained separately for such issue, and the collection of completed application from those investors, what price they are ready to buy the particular issue have been collected from those investors, and allotment of such securities in the market. It is going to be the process how the allotment is going to be happen. Either they are in case of the event of the oversubscription or the undersubscription, how it is going to be allotted. The undersubscription, there is no issue. Whatever the kind of the bid we have received, it is proceeded as it is. But in the case in which the oversubscription from the company they have received from the market, overwhelming responsibilities from the market, they have adopted some procedure for allotment of securities. Either it may be in the form of preferential basis or pro rata basis. they allot the securities in the market. The payment schedule and listing of securities, the application money, first call money, second call money, final call money, they'll schedule such things for making payment and listing of such securities in the market. The floating of securities in the market, when it will be floated into the market, those information needs to be provided. And the case of under subscription, they need to have the tie-up with the underwriter for the subscription and subscription of unsubscribed portion of capital in the market needs to be provided. Advantage of book building process. There are some advantages are also associated with that. The reduction in the duration of allotment and listing of such securities in the market. Normally, the allotment and listing that took lot of time in the event of public subscription. That going to be reduced much in the book building process. Reliable allotment procedure have been adopted. It is like priority based or preferential based or pro rata based allotment. The method is to be easily adopted by stating the reason, and quick listing into the stock exchange can be possible out of that, and no price manipulation. The price is determined on the basis of bids received with the lower price and the higher price. What the price in which the investors asked, the price, it is going to be decided. Thank you.